West Africa, where Vetiva Capital Management, in partnership with the IC Securities of Ghana and CFG Bourse of Côte d'Ivoire today, held the first edition of the West African Capital Markets Conference. That summit reviewed the year-to-date performance of the three main bourses on the West Coast, as well as outlook on the opportunities ahead. Let's get more on this now from Luke Ofojebe, head of the SSA Securities coverage at Vetiva Capital. Great to have you this evening on the show.
Good evening, Boasin, and good evening to all viewers watching this at this moment.
Thank you very much, Luke. Very interesting. What were the key highlights or the takeaways of today's West Africa's Capital Market Conference, the first edition, as it were?
So the key takeaway from the conference, to start with, is that this will be the first edition of the West African Capital Markets Conference. And the conference was hosted by Vetiva Capital, CGF Bourse, based in Dakar, and IC Securities, based in Ghana. The overall objective of the conference was to ensure that the integration of the West African capital market is happening at a faster rate. It's also to ensure that investors are exposed to other African stock markets other than their local markets. So for a Nigeria is interested in investing in other stock markets like the Ghanaian stock market and the BRBM stock market, so the conference serves to explain how you can go about that. And more importantly, it was also during this conference that we unveiled the VCI, West African Equity Index.
Okay,
this is a benchmark that's meant to track the performance of equity shares.
Well, we'll get to the equity index in just a minute or two. Luke, how important are the issues of exchange rate risk, liquidity, and demand for investors in these three exchanges? If you look at the performance, broadly speaking, the BRVM and the Ghana Stock Exchange seem to have outperformed Nigeria since the year 2021 started.
So that speaks more to the peculiar issues around foreign exchange, right? So like you said, looking at the Ghanaian market, the market has returned over 40% year to date. And that's a reflection of the relatively stable exchange rates in the country. And that has been able to attract foreign investment inflows. And that's why we've been seeing more positive trading sentiment in the Ghanaian market. But here in the Nigerian market, it's been more of the opposite, right? So because of concerns around foreign exchange risk, foreign investors at the moment are actually avoiding, channeling more funds into the Nigerian equity market. And that's why the market is still in the red zone since the start of the year, despite the fact that 2021 is actually the year of economic recovery.
Let's talk quickly about the new Vetiva Capital Index for the West African markets. Tell me about the composition and the weighting you're giving to the company within that. How soon will it be? Will you be reviewing it and all of that?
That's an interesting one. So, at the conference today, the VCI West African Equity Index was unveiled. The index was launched a few weeks back. The index comprises 17 stocks. 8 stocks were selected from the Nigerian market, 5 from the Ghanaian market, and the remaining 4 from the BRBM market. The criteria used for the selection of stocks are liquidity, large market capitalization, as well as a diversified sector representation. And the index will be reviewed semi-annually, that's in March and September every year, with the first review date in September 2022. That's 1 year from now.
Okay, so but how will this index deepen cross-border investments in the three markets and benefit the companies in the index basket?
Yeah, interesting. So I guess this is where I speak more on the objectives of the index, right? So the index seeks to achieve 3 major objectives. One is to serve as a benchmark that institutional investors that have investments spread across West Africa can use to evaluate the performance of their portfolio. Two is to have an investable index that investors can easily replicate. That's investors that want to have a passive approach towards the equity market. The third one really is to have an index that's effectively, to a reasonable extent, reflects trading sentiment across West Africa. And that's why the index is based on adjusted market cap weighting as opposed to an absolute market cap weighting. If we were to use an absolute market cap weighting, then the index will be more reflective of the Nigerian trading sentiment, because currently the Nigerian market actually accounts for more than 72% of the total market capitalization across West Africa.
Now, in terms of what more do investors want when they are trading West Africa, and what are some of the issues they are looking to overcome?
Clearly, the major issue they are trying to overcome is that of FX situation, right? So for an investor in Nigeria that wants to have an exposure to equities in other African markets, so because of concerns around foreign exchange risk, I mean, you want to go into the market at a rate of about 412 naira to the dollar. Maybe at the end of the day, you'll make about 20% return. And when you want to repatriate your funds back into Nigeria, the exchange rate has already depreciated to about 480. So at the end of the day, it seems more like you've not really made any significant return. So that's the major risk.
Yeah.
And that's why we need the monetary authority to resolve that.
Yeah, currency, one of the major issues discussed. Thank you so much, Luke Ofojebe. Congratulations, head SSA Equities Coverage at Vetiver Capital Management. Wish you all the best and have a pleasant evening.